Good morning from London. I'm Kriti Gupta alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. The U.S. and China come to a trade agreement that halves fentanyl-related tariffs, resumes soybean purchases, and postpones rare earth restrictions. President Trump calls the meeting, quote, amazing. And another rate cut in the books from the Federal Reserve and a hold over at the BOJ. It's the ECB's turn next. We are live on the ground in Florence. Plus, earnings continue on both sides of the Atlantic. Megacap tech posting mixed results in the States, but blockbuster beats from ranks right here in Europe. Guy.
OK, let's talk about the markets. The markets have got three things to think about this morning. You've got the Trump-Xi meeting, feels underwhelming. That feels like it's market negative right now. You've got tech earnings out of the United States. They feel pretty negative as well. Then you've got to think about Jay Powell. That feels pretty negative too. The Fed didn't exactly give the green light to risk on overnight. All of that being factored into the market this morning. Chinese markets are down, thumbs down in terms of the Trump-Xi meeting. S&P futures flat. They've got a lot to think about this morning in terms of the narrative. Tech, Fed, Xi, all to factor in as well. Europe, as Kriti says, looking a bit more positive. Earnings look OK. Euro dollar ahead of the ECB, up by 0.2%. The countdown to the opening trade starts right now.
President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time.
Apparently, it was an amazing meeting. Amazing. Looking at the market reaction this morning, I'm not quite so convinced. It's not for me to judge, but I do defer to the markets. And we're definitely getting a thumbs down from Chinese equities this morning. US futures have got a lot to think about. You've got to factor in tech. You've got to think about all the other things that are going on around the US markets, including Powell. But this is a factor in it as well. What is happening with the Trump-Xi meeting and where we go with China and the United States. Let's get an on-the-ground update on what we are looking at here. Yvonne Mann, who's monitoring events in Busan, in South Korea, joining us now. What should we take away, Yvonne? What is the real takeaway from this meeting, if anything at all?
Guy, it seems like this is more of a pause to keep things going more than any sort of significant turning point, right? You mentioned about the Chinese readout that we just brought to you half an hour ago. It was very, in terms of tone, was positive, but short on details once again, and was in contrast to what we heard from President Trump on Air Force One as he departed Busan, South Korea, and headed back to the White House. In this Chinese readout, no mention of fentanyl tariffs, no mention of chip curbs, no mention of when it came to soybean purchases as well. And so it's a bit different than what we heard from the president, where he talked about fentanyl tariffs cut in half to 10%, which would be seen as a win for China. President Trump also talked about China resuming purchases of soybeans and will be a welcome relief for U.S. farmers that have essentially been cut off from the number one customer, China, this season. And when it came to rare earths, President Trump said China had agreed to a one-year pause on its global licensing when it came to critical minerals. So, we're not getting those sort of details in this Chinese readout. It's much more of a summary talking about the two sides quickly refining and finalizing the details and subsequent work. This sounds like there's still some issues that are still pending, but they still talk about striking a positive tone, cooperation when it comes to trade, as well as sectors like in energy. What we did see that was aligned was potentially these two nation leaders there are willing to meet and continue on exchanging views. We heard from President Trump saying he's excited and wants to visit President Xi in April. We heard that from the Chinese readout as well, that they are looking to see more of these meetings later on next year. But still, we're waiting for the official U.S. readout from all this right now. But just looking at it right now, it seems to still be a bit of gaps there in the language and as well as what was agreed upon.
Yvonne Mann in Busan, South Korea, giving us an update on the heels of that high-stakes meeting. We thank you so much. So much anticipation built into this meeting with very little result. That being said, we're talking about this market reaction. There was so much baked into it at the start of this week, even just having them both have similar schedules, have the idea that they're going to be speaking even for 90 minutes. But as things stand, to your point, it sounds like we're still hurtling towards the November 10th trade truce expiration deadline. Maybe.
It feels like... It feels to me as if it hasn't got worse, but it hasn't got better. So we're kind of as you were. That seems to be kind of largely the picture that seems to be coming out of this. And it seems like both sides are reasonably satisfied with this. Be interesting to see how NVIDIA trades today. Yeah. I think the anticipation earlier on this week was mainly about the fact that maybe we could see a breakthrough on chips. Doesn't look like that's happened. It's going to be interesting to see whether Nvidia backs off its shares back off the kind of the push that we've seen higher earlier on this week.
Yeah.
That's kind of the only takeaway. Other than that, I think we're really struggling here. I think we've got to assume that the steady state now is kind of what we have right now in terms of tariffs and what we have in terms of the relationship. It's tense. It's not getting worse. It's not getting better. Markets can kind of, I suspect, live with that. But we're not getting the big boost that maybe we would have anticipated. We're also not getting the big boost from Powell either this morning. And let's talk about what we got from the central bank last night. Jay Powell, mixed data, mixed FOMC. Seems to be the kind of the takeaway here. Big divisions in terms of opinion on what we're seeing in terms of the US economy. And Powell was really, I haven't heard him be this clear in terms of what he said in terms of the December meeting for quite a while, and being, you guys are ahead of yourselves. Like, this is not a done deal. We are not on cruise control here. We do not know what is happening. We don't have the data. We've got a pretty good idea of what's going on, but we cannot make a decision about December at this point. That feels market negative to me.
It does feel market negative. It also feels like, and I thought this was really interesting commentary from our Fed special yesterday, Bob Michael over JP Morgan, who really leads the fixed income business there, had talked about the fact the key piece for him was the dissent, not from Stephen Myron, but from Schmidt, instead, the Kansas City Fed president, who said no rate cut at all. He's actually starting to tilt a little bit hawkish. And I think that dissent, is really crucial because it's one that nobody saw coming. Bob Michael over at JP Morgan went as far to say that that is a sign that Jay Powell is losing his grip on the FOMC as a whole. And I thought that was a really key piece that, again, no one really saw coming.
Yeah, it's a really confusing picture.
Yeah.
And you can kind of understand why the FOMC is confused. There's clearly some weakness emerging in the labour markets. OK, but how strong is that weakness? How weak is that weakness? But on the other hand, you've got spending. Spending looks amazing in America. But is that related to what is happening in the stock market? Is that related to what is happening with AI? The data is super confusing. So I think it's understandable that people have a different view on what is happening here, and you are getting more extreme views. Yeah,
and we are also, and I think this is the part that hasn't necessarily shown up in the data yet, we're on week 4, going on week 5 of a government shutdown that is nowhere near even having a discussion to end or get to come to some sort of agreement. I think what's also really crucial here is that it feels like this market is treating a deceleration in growth, even though you do see their spending in the States. It is still less than what we've perhaps saw a couple of years ago, as the same as the idea that a recession is around the corner. And that's perhaps the mispricing that Jay Powell is trying to get into.
He painted a picture of an okay economy, kind of not getting worse, not getting better, doing all right, kind of
very Goldilocks.
That's okay.
Yeah.
Let's talk about the earnings we've had out this morning, because that, I think, is what's going to be a big factor for the European markets this morning. Just had folks' Shell numbers dropping onto the screen. The oil major out with Q3 adjusted profit that has beaten estimates. It's going to plan a share buyback of $3.5 billion. It beat the average analyst estimates, adjusted profit of $5.43 billion. Now, that's down nearly 10% year on year, but it handily beats the estimate that was around 4.74.
We should talk about Total as well, of course, sticking with the energy picture here. Their adjusted net numbers coming in kind of in line with estimates. $3.98 billion is where I'm looking at. The estimate was $3.96 billion. The profit is, however, getting a little bit better. The refining story seems to be working in their favor. Also got some good cash flow numbers. So it might just be that energy is where we see the outperformance at the opening trade. Yeah,
we've got Puma. I haven't actually looked at Puma yet, so let's find out what's going on with Puma.
Lots of earnings coming out. It's like drinking out of a fire hose.
Well, Puma obviously has done very well recently in terms of its performance as a result of the kind of the leisure shoe, the terrace shoe.
Yeah.
But now it's pushing on and running. Everybody else is trying to kind of get that story going. Q3 adjusted EBIT missing estimates. The share has been pummeled. The shares have been pummeled recently.
Yeah.
And it'll be interesting to see kind of where we go from here with that stock. It's Adidas has had the really good run within the kind of the leisure story.
Yeah.
We've talked a lot about the Sambas. That maybe
you have talked a lot about the Sambas.
But Puma's had a really tough time. Anyway, we'll come back. I promise I will read into Puma and get more details.
There's a CEO revamp there. There's a big marketing push. We're going to dive into the details. In the meantime, in literally the last couple of minutes, we've got an update coming out of China where they are confirming some of the things that Donald Trump had talked about in terms of what that trade negotiation actually looks like. Let me just walk you through some of these headlines. China will indeed halt the export controls announced on October 9th for 1 year. That's something something that both Donald Trump and Scott Bessent talked about, coming to the rare earths picture. They are also talking about resolving the issues of TikTok with the United States. Again, not clear whether that means a full divestment, as Donald Trump suggests, or something more. They're also talking about suspending countermeasures against the United States when it comes to ships. That's been a key theme, Guy, when it comes to his tour in Asia, something that came up with this meetings in South Korea and Japan as well.
The export controls is interesting. Do you feel that was put on the table to take off the table? Maybe.
Maybe.
Anyway, we've got a full show coming up. Banks are a big piece of the puzzle today. Tonight, Raoul is the CFO over at ING. Fee income is up really strongly at ING. I want to find out why. Clotilde Lagverne is the CFO at Credit Agricole. Going to be talking about Credit Agricole shortly. Nancy Curtin, CIO at Alti Global, will be joining us on set at the Open. She's been really positive recently. Is she still? And Freya Beamish, Chief Economist at TS Lombard, here to give us a readout on China, on the ECB, on what is happening in terms of the Dutch election. There's a whole range of stuff here in Europe that we need to talk about, plus more broadly, the Fed as well.
Yeah, lots going on and lots of data to accompany some of the, at least, economic pivots that we are going to see throughout the rest of the day. 10 a.m. UK time, your area third quarter GDP was really the precursor, honestly, to I think what we're waiting to hear from Christine Lagarde. You have a BOJ that's holding. You have a Federal Reserve that is cutting. What does that signal for Christine Lagarde? She speaks at 1:45, just 30 minutes after the ECB rate decision. But then again, we're not done with earnings. We have to talk about these tech earnings. We have Apple and Amazon today. We had Microsoft, Alphabet, and Meta yesterday. Mixed results, pretty violent market reactions in both directions.
It's about spending. That seems to be the takeaway from what we saw yesterday. Meta, spending's up. The market didn't like that very much in terms of the tone that we got with that. Microsoft, similar kind of picture. But you look at Alphabet, you look at Google. We can fund this out of our advertising business.
Yeah.
Tick in the box. Market likes that. So you can do this as a kind of as you are run rate, and the market rewards that. The spending story is now key for these companies. They're becoming hardware companies in a way, and how that changes the narrative is beginning to be evidenced in terms of the reaction you highlight. Big reactions.
Well, they're acting like they're value companies. If you're CapEx focused, you should be trading at value multiples, not growth multiples.
That's quite a big shift.
I know. But that is something that still it doesn't feel like it's in the price.
Yeah.
If that's where the focus is.
Yeah, and we're going to work, and we've still got to get detail. If you're ramping up spending, what's the rate of return on this spending? What are you going to be delivering for me? Are you really going to deliver the kind of return that I've got used to in terms of the company that you have been? Let's talk about what else we're watching this morning. At least 30 people are dead, with nearly $8 billion of damage reported after Hurricane Melissa tore through the Caribbean. Powerful winds have devastated Jamaica and Haiti, with economic losses in Jamaica alone estimated to be around $7.7 billion. Just in terms of context, that's around 35% of the island's GDP. Aid groups have begun mobilizing to provide assistance. Back to tech. OpenAI is reportedly aiming to go public by 2027. According to Reuters reporting, the offer could raise at least $60 billion and value the company at up to $1 trillion. OpenAI has just completed a restructuring into a for-profit business, signing a new pact with Microsoft and making concessions to regulators. And the Progressive Democrats 66 party is on track to come first in the Dutch parliamentary elections. This after voters dealt a blow to Geert Wilders' far-right Freedom Party. D66 is set to win 27 seats in the 150-seat House of Representatives. This according to a preliminary forecast published by the Dutch news agency ANP. After 50% of the votes were counted. We're still waiting for the final numbers. The Freedom Party looks poised to win. It looks like at this point around 25 seats. Now that's a loss of around 12 seats, Kriti.
Yeah, coming up on the program, we're going to bring you more on that Dutch election. Bloomberg's Oliver Crook is going to be on the ground joining us live from Amsterdam. Plus, right back to the earnings picture, the German airline group Lufthansa says it's confident it can end the year with significantly higher operating profit despite the global uncertainties. We'll bring you more on those earnings. But up next, sticking with that European earnings picture, ING third quarter profit beats estimates and the company announces a 1.1 billion euro share buyback. We'll be joined by the bank's CFO shortly. If you have any questions for us, before our guests get involved in the conversation, IB plus BBTV Go is the function on your terminal. This is Bloomberg.
Thursday the 30th. Good morning. How are you doing? 41 minutes to go until the equity markets open here in Europe. European futures are actually reasonably positive. US futures aren't, and the picture out of Asia is not exactly positive either. But here we've got a lot of kind of reasonably good earnings that we need to be digesting. Let's talk about ING, the Netherlands' biggest bank. Worth focusing on, particularly given the politics around what we're seeing today. But the numbers are fascinating as well. So let's dig into them. ING this morning has announced a €1.1 billion buyback. It's also boosting its 2025 revenue goal. Profit beat estimates. Here's the number, OK? Here's the number you want to think about when it comes to ING this morning. Fee income surged to 16%. Look back through the numbers, and the average is about fee income 9%. So how have we gone from 9% to 16%? Let's try and answer that question and a few others as well. Tanate Futrakul is the CFO of ING and joins us this morning. Good morning. Let's start with that fee income, because it's the number that really stands out to us this morning. You've gone from an average of 9% fee income increase to 16%. And I'm just wondering how you've done that.
Thank you very much, Guy, and nice to be on the program. I think the biggest driver of fee income is customer growth, right? That we have added over 1.1 million customers over the past 12 months. And that has been a key to us to increase the number of primary mobile customers. So that's a big driver of retail fees. That's the first. The second one is, I think, is that we had a really strong wholesale banking quarter. Lots of fees in the wholesale bank, up 19%. And if you look back in Q1, Q2, because of Liberation Day, I think activities by wholesale customers were a bit benign, given what's happening there. But they're really back in a big way in the third quarter, very strong levels of activity. Yeah.
Today, is 16% the new number? Is 16% sustainable?
Well, we have adjusted our guidance. We had given guidance before of fee growth of between 5 to 10. And we adjusted our guidance that will be more than 10 for 2025. And we are committed to achieving around 5 billion euros in fee income by 2027.
OK. You have, over the last few years, been one of the standout stories when it comes to returning money to shareholders. You have, however, this time around started to push, well, you're pushing up your CET1 ratio, which tells me that you're kind of getting ready for something. A, I'm wondering, what are you getting ready for? And B, does the higher CET1 imply that actually returning money to shareholders over the next few years will be a little lower than what we've seen over the last few years?
Yes, I think we operated a couple of years ago close to 15% core tier 1. And so we've been returning quite substantial capital and cash distribution to our shareholders. Now we're operating at the right level as far as we're concerned at 13% capital levels. So the level of shareholder return or capital returns will be a bit less. But I think the good thing that I take away from our results is that capital discipline remains in place. We deploy capital where it makes sense, and where it doesn't make sense, we give it back to our shareholders. And that remains our strategy in terms of managing capital over time.
Tanate, it's Kriti in London. Thank you so much for your time this morning. Let's talk a little bit about how that strategy squares with some of the comments ING has made in the past. You talked about 950 positions potentially being at risk in the Netherlands. Could you just give us a little bit more insight on where those 950 positions lie within the business and how that move might be useful to the bottom line?
I think this is part of our strategy to become scalable bank, right? Which means that we need to look for ways to create efficiencies, and we do that all the time. And as our world becomes more digital, that means there's a shift in employment, less operational roles, more tech roles. So that's what you see there. And those indications of staff reductions are only indications, but we will announce formal plans as we have them. But I think the impact is that the big theme for the long term is that we will continue to look for efficiencies, and that we will announce as we have those plans.
Can you give us also an update on some comments you had made, I believe, on Bloomberg Television previously about being conservative when it comes to the likes of SRTs? You had mentioned that there might be material trades coming in the back half of the year. Can you give us an update on that as well?
Yes, I think we have said that we would do our first series of SRT in Q4. That remains to be the case. We're on track in terms of getting regulatory approval, and we plan to execute that transaction in Q4, and it will have an uplift of our core tier 1 of around 10 basis points. So that's coming in Q4.
Tonight, can I just get your the ECB's coming up today? Can I just get your outlook on what you think the rate story is going to look like, and by extension, net interest income? Do you think rates are stable now? Is that the picture we're working with? Do you think you could see further reductions? What impact would that have on your numbers?
Yeah, I'm looking forward to hearing from the ECB this afternoon, but my expectation is that rates will remain at 2%, given what happened overnight by the Fed as well. And I think this is an ideal, optimum place for European banks to operate in, including ING, to have rates around 2 to 3% base rate. And that's what I mean with a positive forward curve. This is what we have now. And I think it bodes well for our net interest income going into 26 with good momentum.
Tanate, let's zoom out even further, if we can, and talk about the Dutch election. We are on tenterhooks waiting for the result there. It looks like two very different potential outcomes on the table. Walk us through how either outcome might affect your business.
Well, I think the primary thing for a business like ours is to have stability and longevity in Parliament. And I think looking at the exit polls, I think that's what we will get. Right, and we're looking forward to engaging with the new government on topics which are clearly on the top of our mind for banking, a banking union, capital markets union, taxation for the banking industry, and a positive investment climate. These are topics that we're ready to engage with the new government when it's formed.
All right. Tanate Phutrakul, Chief Financial Officer over at ING, walking us through his view on the micro all the way to the macro. We thank you so much, Guy.
Let's get back to the macro and talk a little bit about what we're getting. We're getting this kind of ongoing readout from China on the conversation that happened between Presidents Trump and Xi. The latest is basically China is signaling that the US is going to extend the suspension of the 24% reciprocal tariffs for 1 year. That's kind of so as you were, basically. Suspension of those kind of tariffs going forward. China's going to adjust its countermeasures after the US tariff adjustments as well. Again, kind of this feels very steady state. So we're not going to go any further, but we're kind of the kind of dialing back is also fairly restricted as well.
Well, the timing of this is fascinating as well, because going into next week, we also have a Supreme Court hearing over in the States about whether these tariffs are even legal to begin with. So I wonder if, to some extent, the Supreme Court does some of the work for China.
Yes. We'll wait. We'll see what happens on that front, though I suspect the White House has a plan B, maybe even a plan C.
I'm sure, absolutely. I thought that another piece of this is, of course, the agricultural purchases. This was such a key pillar of some of Donald Trump's kind of key plans in his first administration. It's where he's feeling pressure when it comes to midterms. What is he going to tell the farmers of America? That's going to be a key sticking point, at least when he goes back to the States. Coming up on the program, we're going to continue to give you the readout as we get it from the conversation between the two world leaders. We also have our eye firmly on the earnings picture. We just spoke to the ING CFO. Next up is the CFO of Crédit Agricole in an exclusive conversation. Stick with us. This is Bloomberg.
Welcome back. Half an hour to go until we're going to see cash trading for European equities. At the moment, the futures picture here in Europe is a little mixed. So London looks a little softer this morning. Eurostock 50 futures, though, are positive. We've got a whole raft of earnings that we need to fold in to our thinking here in Europe this morning. CAC futures, as we turn our attention to France, fairly flat.
Fairly fat. Let's see if there's something going on in the bond market. Look, we are in the middle of, I'm going to call it a central bank sandwich, if we can. We just had the Federal Reserve. We have the ECB later today. The U.S. 10-year is at 408. It's a little bit of a sell-off in the bond market. Looks like that's kind of where things are tilted when it comes to the European bond indices. I'm seeing a 3 basis point move higher in the French 10-year. We'll see if that sticks or that shakes out in the next 30 minutes. They're about 29 minutes away from the UK Gilt Open as well. So we are going to square that picture for you. In the meantime, Let's go right back to the earnings picture. We just had a conversation with the CFO of ING. Next up, of course, is Crédit Agricole. They came out with their earnings today. Their third quarter net income beating estimates across the board. It looks like they're also kind of dealing with some of the stories around the BPM, their Italian business. Let's get into some of the details here. The CFO of Crédit Agricole joins us now for an exclusive interview. Clotilde Langevin, we thank you so much for your time this morning. Clotilde, just walk us through some of the numbers this morning. What drove that net income beat?
Yeah, thank you. Thank you for having me. We have a very strong set of results this quarter. Net income grew to 6 billion over the first 9 months of the year, which is in fact the target that we had set for the full year 2025 in our medium-term plan. And this drive in net income was driven by revenues that were very sustained, thanks to sustained activity in all of our business lines. So strong home loan production in France, strong corporate loan production in France and in Italy, strong inflows in insurance and in asset management, a very strong performance in our CIB with a record 9 months. And so this growth in revenues contributed, along with our operational efficiency, to very strong profitability. We posted an ROTE of 15.4% this quarter.
Well, Clotilde, speaking of some of that boost that's showing up in your numbers, it looks like you also got a boost, or Crédit Agricole also got a boost from your stake in Banco BPM, which brings us nicely to a story that we are very closely following here on Bloomberg, which is simply the idea of consolidation when it comes to the banking space. Not only does Crédit Agricole have a stake in Banco BPM, you have an Italian arm of the Crédit Agricole business as well. Is a combination of those two businesses on the table? How are you thinking about your Italian exposure?
Well, just maybe to take a step back on the boost of Banco BPM to our results, this boost is not in any way virtual. We have an impact of the revaluation of the shares of Banco BPM, but once we consolidate this participation in equity accounting, we will have a regular 100 million net income impact every quarter. So this is a solid boost, which is not virtual and which is structural. Now, regarding our structure in Italy, as you know, is our second domestic market, and our strategy is clear. We have a retail bank, we have business lines, and our strategy is unchanged in Italy. We're committed to financing the Italian economy. We have 62 billion retail banking outstanding in Italy. We have more than 6 million customers. We have 340 million customer assets, and this strategy will continue. Now, we do have this participation in Banco BPM. I was telling you that we want to equity account this participation to reduce the volatility in our accounts. And so we're concentrating on what we can control, which is setting up a long-term partnership with Banco BPM.
Okay. Clotilde, good morning, it's Guy. Can we just break this down a little bit? If you strip out the benefit to your numbers this time around from Banco BPM, how's the rest of the business performing? Because the analyst commentary I'm reading this morning suggests that actually, once you take that out of the numbers, the rest of the numbers don't look that great. And this isn't a kind of quality beat, as some would describe it. It's a business that elsewhere is finding life fairly tough. Is that a fair description? How much of a halo effect are you getting off the Banco BPM upgrade that you're seeing in these figures?
Well, as I was saying, if we did not have the revaluation of the shares, we would have an increase in net income thanks to our equity accounting. So this is something that is structurally contributing to our net income. Now, besides Banco BPM, we have a very strong activity in French retail, activity in life insurance, activity in asset management, activity in CIB. And also, I wanted to also recall that we're buying back this quarter the minority stake of Santander in our asset serving activities in CACEIS, 30.5%. So all of this drives growth. Going forward, we also have this activity which will continue to feed into our profitability, because we also have strong profitability because we have strong operational efficiency. The cost to income ratio is low. And we also have a very high quality of our cost of risk, loan loss provisions that are very strong. And so we have a very robust and solid setup.
So you would say this is a high-quality set of numbers. The quality in these numbers is high.
Yes, we have a quality of our setup, of our capital position, of our liquidity position. The cost of risk is stable, loan loss provisions are high, and activity was sustained. So all of these elements are set the grounds for the medium-term plan we're going to comment on the 18th of November.
We look forward to, of course, seeing that. Clotilde, let's talk about something perhaps a little bit closer to home, and that, of course, is some of the political chaos that we are seeing in France. It's no secret that French banks like Crédit Agricole are extremely exposed to some of the issues that are baked into the sovereign debt as we start to await for a very long time some sort of French budget. Clotilde, just walk us through that exposure to the French sovereign bond market. Is there any indication, any desire to limit some of that exposure as, again, the political saga drags on?
So regarding exposure, our group is naturally exposed to French sovereign debt due to the construction of our liquidity portfolio, but also to our client investments, in particular in life insurance. But the vast majority of this exposure is not sensitive to any changes in valuation because of the way we account it. We account it at amortized cost for the banking portfolio and VFA model for the insurance portfolio. Now, what's the case here is that we have a situation where there is uncertainty in France regarding the budget. Now, this uncertainty is detrimental for the activity of our corporate and individual customers. But as of today, we are witnessing a strong resilience of our corporate customers. Activity in our financing activities in the CIB is very strong, but also resilience in French retail, where corporate loan production is quite strong. So activity is strong, but of course we're monitoring closely smaller B2C corporates. But again, the cost of risk is very stable and our resilience is very strong.
Clotilde, I'm so glad you mentioned your corporate consumer, and it's good to hear that they're resilient because part of what's coming out of the French negotiations is a higher corporate tax going into next year, one that was really given the green light over the weekend. Is the corporate kind of consumer group that you're talking about, can they weather that tax increase?
Corporates that were our corporate clients are, as of today, resilient. For us, Groupe Crédit Agricole, we have had a strong impact this year of this additional corporate tax in our books, about 200 million for the group and 160 million for CASA. Now, going forward, it's far too early to draw any conclusions, but we always have to be very prudent in our projections in the same way that our corporate customers have to be prudent also.
Clotilde, we're going to leave you there. Thank you very much indeed. Clotilde Langeron joining us, CFO of Crédit Agricole. An exclusive interview. Coming up, we're going to be talking more about the banks. There are lots of numbers out this morning. Lenders here in Europe sounding reasonably confident.
After a period of reflection, again, after April the 2nd, they're putting money at work. And that they are showing increased confidence. Now we'll see whether policy uncertainty continues to reduce, because that is an important contributor to the fact. But these are really powerful trends.
Powerful trends. The View of Standard Chartered. Up next, we're going to take a look at the stocks that you need to be watching coming into the open. Banks are a big piece of the puzzle, but you've got Volkswagen, Stellantis. There's so many other stocks that we need to be talking about. We are going to do that next. This is Bloomberg. Thursday the 30th, good morning. 16 minutes to go until we start cash trading here in Europe for European equities. There's a lot to fold in to this market this morning. Let's start off at the top, kind of geopolitics, and work our way down from there. President Trump says he'll go to China in April. This follows the trade talks that we've just seen with China's Xi Jinping in South Korea. Beijing says the US has agreed to a year-long delay to an expansion of sanctions against Chinese firms. As the two men sat down, President Xi predicted they would work well together.
I always believe that China's development goes hand in hand with your vision to make America great again. Our two countries are fully able to help each other succeed and prosper together.
And in terms of what we got from the American side, this is what President Trump had to say. He was pretty positive.
President Xi is a great leader of a great country, and I think we're going to have a fantastic relationship for a long period of time.
Okay, the views from both sides of the table. Let's get a view of what actually happened and figure out where we go from here. Our editor-at-large, Marty Schenker, is here in London, so it's fantastic to get him around the table this morning. Good morning, Marty.
Good morning.
What just happened?
I think the best thing you could say is that there was do no harm philosophy out of these talks, and that's what happened. If you see the market reaction, it's kind of an exhale. It's not exuberance, and there was quite a build-up to this trade talks, and nothing really bad happened. So I think that's a good thing.
Yep. In terms of nothing really bad happening, that's good. So the market
Right.
kind of doesn't get a fright, Halloween fright. But in terms of what it tells us about going forward from here, should we just assume that the kind of the steady state that we're working with right now is now the long-term trajectory of this relationship?
Yeah, I mean, what the markets want and what policymakers want is some degree of certainty, and it looks like they have agreed to back off, no more surprises, like the Chinese restrictions on rare earths. That's off the table for at least a year. There does seem to be a very positive dialogue on both sides, and I think policymakers, companies, financial markets can move ahead thinking that things are kind of stable for now.
I guess it is an improvement from not talking at all in terms of getting the dialogue. There was a piece of this readout that I thought was really interesting. Donald Trump has been on this world tour to get investment from the Middle East, from various Asian countries, and China has kind of been on the hit or miss list of that. He's talked about kind of encouraging Chinese investment into the United States. He's also talked about how that's a national security risk. Can China invest in the United States the way that Japan, Malaysia, South Korea can?
Well, of course, the devil's in the details. And throughout this whole trade regime of Donald Trump, details are quite lacking. He may make vague statements about allowing Chinese to come into the U.S. market, but then you have TikTok, right? And that still has not been fully resolved. They have committed to resolve it. But there are many other issues where national security comes in, NVIDIA chips being key among them. That also was not resolved. So while the atmospheric stuff is positive, again, it's all in the details.
And I don't think Taiwan was even discussed or breathed of or even maybe even thought of in that.
Going into this, there was some discussion that it would be a 3 or 4 hour meeting. It was only an hour and a half, so I guess they just didn't get to it.
Is there I'm just curious, I mean, to your point of that we're light on the details, Guy and I were talking about this earlier in the show. So come November 10th, which is when the trade truce expiration is supposed to happen, what exactly happens on November 11th? What kind of rates are we working with here?
Well, right now, I think the tariff rate on Chinese goods after these agreements and the reduction in the fentanyl tariffs is about 47%. Still, that's pretty significant, but way less than the 155% Donald Trump was talking about just a week ago.
Taking a step back, Donald Trump's done a series of things in the first part of his presidency in terms of trade relationships with other countries. China feels different and harder. And the Chinese don't seem browbeaten by Trump in the way that other nations have been. How different is the relationship between Washington and Beijing in terms of Trump's ability to define the narrative, to get what he wants? Did Trump get what he wants today? Is that what's a win for him, and how different is it when it comes to China?
Well, it is very different, and if you can remember back to 2015, when Donald Trump first was running for the presidency, China, China, China was his constant refrain in a very negative way. But then he moves through his first term and now through the first part of his second term. He is trying to normalize the relationship to a certain extent, and he's not demonizing China as much as he used to. So it is special because it's the second largest economy in the world. There are geopolitical tensions involved. There's Taiwan. So I think Donald Trump is still trying to figure out exactly where he wants to be on China, and he's taking it step by step, issue by issue.
Very quickly, Marty, how is this being received domestically, especially when it comes to farmers, when it comes to his base, when it comes to soybean purchases? How is he selling this to his base.
Well, when he gets back, he's going to be selling the soybean part. You know, the Chinese, Bloomberg reported yesterday, had their first purchase of soybeans. If they start buying agricultural products in size, he can just tell the farmers, I delivered for you.
There you go. Bloomberg's editor-at-large, Marty Schenker, joining us, of course, on his world tour. We thank you so much. Let's take what Marty told us and apply it to the markets here and get another take from our Markets Live executive editor, Mark Cudmore. Mark, we just talked to Marty about just what we kind of got out of this read, but the markets are shrugging their shoulders. Is that because the positivity was earlier this week, or is this a nothing burger?
I think you're absolutely right, Kriti. I think that this week has seen a big development in the US-China relationship. As Marty outlined, things haven't gotten worse. If anything, there's a slight kind of improvement at the margin situation. But most of the actual positives which Trump confirmed today were negotiated earlier in the week in Malaysia. So everyone's kind of going, oh, we're delivered exactly what was said in the tin. No positive surprises. And at the margin, there wasn't a discussion of Blackwell chips, which was the driver of yesterday's market moves in NVIDIA. That kind of pop there. So at the margin, it disappointed today. But this week, it's been positive.
You're really risk on. You don't see any downside at the moment. Why?
Yeah, I've been looking all day for a reason to be bearish. There's only one theme that matters in markets, and that is the AI theme. You know, the US-China thing has been a bit of a distraction. These central bank meetings don't really matter at all. There's loads of them, but they don't really matter at all. It's all about AI, and we've talked about the breadth of the market. There's no breadth. That's not a reason to be bearish, as we discussed before. It's a reason to kind of worry about that one theme. But I'm just not seeing any reason why you'd be bearish AI right now. I do believe we're in an AI capex bubble. I do believe it's going to burst disastrously at some point. But I think it's probably well into 2026. Now, I'm completely open-minded. I'll be ready to spot the bubble bursting as soon as it happens. But why is it going to happen now? All the messages we're getting from all the companies at the core of this is that the spending is still immense. Earnings are still strong enough. So we're kind of inflating the capex bubble even further. It's not close to bursting from what I'm seeing, and therefore I find it very, very hard to be bearish. Now, I understand why you might not want to buy more, because everything's expensive. The bullish story is priced. Fair. Don't buy more if that's going to be. But there's no reason to be actively bearish here.
Oh, Mark, you're making me put my bear hat on. How much of this equity rally, even if it is, Mark, I pull it out for Mark when he turns bullish every once in a while. Mark, how much of this equity rally at the end of the day is really the market getting lucky because you have a range-bound bond market, a range-bound FX market, and frankly, a range-bound oil price? How much of this is luck, given that there are no bigger cross-asset moves?
Is that luck, or is that the fundamental drivers? I mean, some of the fundamental drivers is that the Fed is cutting rates despite the fact that assets are a record high, despite the fact that there's no real looseness in the labour market yet. So it's an unusual time to be cutting rates, and we're getting guidance that's to be cut. So that's the reason we don't have the rates volatility. We haven't had FX volatility for years. That's fine. And, you know, we're getting constant pressure to get increase in oil supply, which is also good for the market. So I would say that they're positive fundamentals rather than luck. I think, you know, the base case here is very, very bullish. At some point, there may be a black swan to derail it, and that will cause the volatility you're talking about. But I don't think it's luck to just see the fundamentals as being supportive.
All right. Bloomberg's Markets Live executive editor Mark Cudmore walking us through his bullish view. We thank you so much. Let's go from the macro to the micro. Get our stocks to watch with Chloe Melly. Chloe.
Good morning, Kriti. Let's start with French banks today, and it's a pretty good showing from them. So Société Générale reported profit ahead of expectations thanks to really good cost control and strong fixed income trading as well. For Crédit Agricole, profit also came in ahead of expectations thanks to its investment in Banco BPM. So we could see an additional boost in the shares of those banks today after what's already been a pretty good year. It is worth noting that there's some caution around the political situation in France, and the Crédit Agricole CEO did warn of the impact on the economy and on the attractiveness of France to foreign investors. So let's keep that in mind despite those really good results. Moving on to the beer sector, and we've got a bit of a mixed bag from AB InBev. It reported quite good profit growth, but sales did fall. It also had a buyback, a $6 billion buyback that was announced. For Carlsberg, it was a little bit better, maintained its guidance, said that the sales and volumes were really strong in Europe and in Asia as well. Carlsberg has already been outperforming its peers, so that could continue today. And for AB InBev, we'll see if the investors decide to focus more on that big buyback buyback or more on that those weak volumes and those weak sales across some of its markets. And finally, Volkswagen could also be on the move today after saying that it will need a sufficient supply of semiconductors to meet its financial targets for this year. This is a really clear signal that the shortage of chips from Nexperia is having a big impact, a major challenge for that car sector that's already struggling a little bit. We've seen Volkswagen shares go up and down quite a lot recently, and we could see some weakness in that stock this morning on the back of that warning.
Great stuff. Thank you very much indeed. Plenty of European stocks that we need to be focusing on. Just remember as well, given the fact that we've got only 4 hours between Europe and the United States at the moment, we're also going to get a first look at pre-trade in a few minutes' time on some of the key US stocks that we've been watching. How is Nvidia going to open this morning, given the fact that chips weren't on the docket when it came to this conversation between Trump and Xi?
They weren't on the docket, but not to quote Jensen Huang to this program, but basically earlier this week he said that their exposure to China is zero, and anything is on top of that is a huge bonus, is the way he put it.
Precisely, but we priced in the bonus.
Sure.
Now do we have to take back the bonus? It's always painful. Anyway, that's what the futures look like. The opening trade is next. Looks like a mixed open in Europe. Plenty of single stock volatility coming up. This is Bloomberg. Thursday the 30th. Good morning. Lots to price in this morning, but let's start off by talking about what we saw yesterday and the session we got over in the United States. Little chip onto the green to get things going. He then drifted sideways, waiting for Powell, waiting for Trump Xi. This was the Powell effect, as you can see. He was quite determined to kind of point out to the market that December was not a done deal. Kind of felt like over the last few days the market's priced in the Fed on kind of autopilot, cruise control. We're going to see a series of rate cuts. That was called into question yesterday. The market dipped on the back of that, though it did recover as we came towards the end of the session. But so basically a kind of as you were session. Nothing really to see here. In terms of the futures picture this morning, US futures flat as a pancake, a little negative but not by much. Eurostock futures are up a little bit but not by much. What you've got this morning is a whole series of stocks reporting numbers, and they're basically balancing each other out, it seems, first thing this morning. We're down by 0.2% on the FTSE. DAX futures are up a little bit, but again, it's not a index story this morning, it's a sector stock story this morning, which is why we now turn to Kriti Gupta.
I mean, you kind of said it. I think what's really fascinating here is that the banking story seems really strong. And we've seen that throughout this week. We saw it in the numbers this morning. Even where we start to see maybe some worry spots, and like the Credit Agricole, for example, their numbers on the top line are coming in quite strong. So the bank story has continued to power this market perhaps to the upside. The auto sector is a surprising turnaround, because that's usually not one sector that we associate with strength. And yet, here we are. We had Mercedes earlier this week. We have Stellantis coming out, Volkswagen, plenty of those moves do. Perhaps that's what's showing up in the DAX story as well. And of course, AB InBev, the likes of Lufthansa, there's plenty of other micro stocks to be keeping an eye on. It looks like we're going to be drinking out of a fire hose yet again, Guy, in about a few seconds' time.
Yeah, and we've got the ECB to fold in. We haven't really talked much about the BOJ. There's so much going on this morning to fold in. So let's see how the markets are digesting it all and figure out what the numbers are going to look like. As we anticipate, we are seeing a little bit of a negative start for the FTSE 100. Interested to see what Shell does this morning first thing. We'll see how that is folded in to the wider narrative here for the London market, which has had a decent run recently. The IBEX is down by 0.2% as well. There's quite a few ex-dividends out there, so just bear that in mind this morning. And there's a fair few big names that are going XD. Stock 600, as anticipated, basically flat. We're down less than 0.1% at this point. The CAC's got a lot to think about. Clearly, we've got politics to fold into the market as well around Europe. We'll see how the AEX is not on this board. See how the AEX opens in a few minutes' time. The CAC is down by 0.2%. Feels pretty much in line with what we're seeing elsewhere. We'll wait for the DAX. We'll wait for the SMI to give us the final read on what we're seeing across Europe. So in the meantime, Kriti, what are we seeing in sectors? What are we seeing in stocks?
I'm not able to piece out a narrative just yet from some of these early movers. I mean, your biggest index contributor to the upside is ASML. No surprise there, which is a big tech theme kind of radiating through these markets. We're going to check on some of the US tech names in just a few moments as well. But for the moment, ASML is your biggest index contributor. But you are seeing a big move in the likes of AB InBev, for example. Shares rising 4%. Their third quarter results, a $6 billion buyback. That seems to be a theme that's radiating through. You are also seeing perhaps a little bit of the steam come out of this market, including banks, which aren't moving at all. But maybe that's because some of the banks are rallying so much in the lead up to this moment. Guy, on the surface, this feels like a rotation.
Yeah, a little bit of rotation. There's some tech buying. Airbus is actually seeing a really nice response this morning in terms of its numbers, which it delivered yesterday late. focus on kind of maybe the US investor there. Anheuser-Busch, as you say, is up very nicely, but there are some tech names that are up. SocGen's actually up by 2.4%. Standard Chartered is up by nearly 3% this morning. So you are seeing some bank positivity coming through. Schneider's a little soft. I need to just actually go back and check my XDs and see what they are in terms of the list that I'm watching. I've got a list somewhere.
I don't think Schneider's on it.
No, it's not. Inditex is, though, and that's a big name, and Santander is as well, which may account for some of the movement we're seeing in terms of the Spanish market. Total, though, is down by 2.75 in the oil space. We are seeing some weakness when it comes to what we are getting in terms of the oil majors this morning.
Yeah, and I should keep an eye that Rio Tinto is also trading lower by quite a significant margin, down about 1.5%. It's seeing a little bit of heavy volume here, which is interesting. The miners are perhaps the first place you would look in the FTSE in terms of pricing in some of the trade conversation that we're seeing. And some of the steam is coming out of that market. We're going to get a little bit more analysis here. Nancy Curtin, CIO over at Alti Tiedemann Global, joins us around the table. Hi, welcome.
Morning.
There's so much to digest. I don't even know where to start, but I think I'm going to go for the easy one, which is trade.
Yep.
We didn't get much out of it, but we didn't get something bad out of it. How do we think about trade in terms of this market?
You mean the big, amazing meeting yesterday, which was totally on script with lots of pomp and circumstance? Look, we got exactly what had been forecasted, which is reduction in fentanyl, a couple of soybeans that China will buy for the United States, and a delay in the export restrictions on critical minerals. We didn't get any news on the Blackwell chips. I mean, Trump sort of mentioned it in passing.
So
it was as expected.
While you mentioned that, NVIDIA not actually budging. I'm looking at the pre-market right now. It's up by 0.4%.
Well, it had risen a bit yesterday on that speculation, right? So I think it was as expected. Look, what's important is the two countries, the world's first and second largest economies, are not in the middle of a trade war. And I think they agreed to meet again in April. So we have a kind of framework, a sort of mini trade détente. In that sense, it was fine. It was as forecasted.
So when we're trying to price this in, it feels like the narrative has substantially shifted from where we were 6 months ago, where we were talking about margin compression, we were talking about supply chain costs, we were talking about export restrictions. Is the market looking through some of these things that are still kind of in the air?
I think so. Look, the effective tariff rate at the moment is about 17% in the United States. We have seen some good price increases. We heard Chair Powell yesterday. He talked about the fact that goods prices have gone up. He sees it as a one-time, or at least that's the expectation, and services disinflation kicking in, particularly owner-equivalent rent, which we've been waiting for years. So, look, I think the inflation picture is okay. The reason we're getting the rate cuts is because what's going on in the labor market in the States. So, generally, I think the trade picture, people are now moving that to the back of the queue, so to speak, in terms of areas of concern and focus, and really looking ahead to what's going on in Gen AI.
Are we getting the rate cuts? Are you sure about that?
Well, I thought it was super interesting yesterday because he said, look, the labor market's moderating, but we think it's okay. And I'm thinking, okay, we don't have any government statistics, but has he not noticed the 150,000 workers that I've been counting over the last couple of weeks of layoffs, including Amazon?
He said he was watching them.
Okay, well, if I saw that, I'd be like, we're probably going to have a December rate cut. So that's my view. We will get a December rate cut. He was obviously quite cool on that yesterday. That's why the market sold off. Look, what's happening here in terms of the labor market, it was a bit of Doge in the beginning, a bit of the energy sector, a bit of trade, manufacturing that caused the layoffs. Now I think it's Gen AI, and I think we're beginning to see that. Take a look at Amazon, 34K, so to speak, in terms of layoffs. And I thought super interesting, Amazon hinted at the fact that in 5 years from today, they'll be using, AI-inspired, powered humanoids, robots to do all their fulfillment. That means picking stuff off shelves, and they think they'll get a 30%
And you think is that enough to get this market going higher? It was interesting. We were talking to Mark Cudmore, our market setter, a little bit earlier. He's saying, I can't see any reason to be bearish. I can't see any reason to be bullish at this point. What's the reason to put more money to work in this market, other than the mechanical ETF kind of flow into haven't we priced all of this?
I mean, to a certain extent, you're right. There's been a lot of good news priced in. Having said that, we're still in the midst of the third quarter earnings season. 87% of companies have beat expectation. The tech sector, with some varying results, beat yesterday. And that's important. If we end up again with 12 to 13% earnings growth in this quarter, with expectations of a rise in the fourth quarter, that helps sustain markets. Also, look, a lot of people have missed this rally. Many institutional investors are still underweight.
Sure.
Strategists scrambling to get their numbers higher. Going to look like a turkey here.
Okay, I spoke to Sergio Mossi yesterday, CEO of UBS. He's like, people are getting defensive. Our clients are beginning to position for a more defensive outlook that they need to be working with at the moment. Is now the time for capital build, or is now the time for capital kind of preservation? You've had an amazing run in these markets. Is it now not the moment to say, you know what, I've had an amazing run, time to start thinking about maybe preserving some of the gains that I've generated?
Well, we don't like to trade on short-term fundamentals.
That's not a long-term fundamental.
And remember, for a U.S. taxable, becoming more defensive now means paying capital gains, in the last 2 months of the year. It makes no sense. I think if there's a correction, it's going to happen in January as people rebalance their portfolios back to their neutral target, as opposed to now. Why incur capital gains now in the last 2 months of the year? I remember there's a lot of cash sitting on the sidelines. So I'm not pounding the table. Markets have risen fast and furious. Yep. I think a consolidation, a pullback, a correction would be super healthy here. Look, we're up close to 40% since the April lows. We've added $16 trillion in market cap. These are big, fancy numbers. So a consolidation would be good. But I think the fundamentals remain pretty attractive still.
Well, interesting that you mentioned the fundamental. I'm just looking at some of the pre-market moves. Again, most wonderful time of the year when the time difference is only 4 hours. Your biggest pre-market mover in the U.S. at the moment is Chipotle. It's down 17%. And Nancy, I want to ask you about Chipotle specifically, but as I was kind of looking at what's going on here, it looks like they're talking about feeling the pinch, feeling the pullback. People just aren't buying kind of fast food, casual dining, which really speaks to this pinch of disposable income. If you are talking about the unemployment that you had laid out, the pinch here, can a rate cut look through that when it comes to macro investments?
So, great question. Look, the U.S. is experiencing a kind of two-speed or K-shaped economy. So the lower-end consumers are the ones that are getting laid off, are the ones that are feeling the pinch, are the ones that will benefit from a rate cut because they may have credit card debt, they may have student loans, okay? Yeah. So that's the lower end of the market. And I think Chair Powell alluded to that yesterday. The mid to upper-end consumer doing just fine. The wealth effect in America is quite extraordinary, and that accounts for the lion's share of consumption. Consumption growth has remained strong. Right?
But then why are we seeing this rally broaden out? What you're describing shouldn't show breadth, and yet here we are, we're looking at breadth.
So what we're looking at is weakness in things like Chipotle and some of the lower-end retailers and big-box retailers and some of the fast food companies that would be associated with the lower-end consumer. What we're seeing that's broadening out is the Gen AI trade is broadening to other parts of the market. Let's see what's done well this year. Technology and communication services, industrials, and utilities. That's all about Gen AI, right? Financials, deregulation. So we do think the Gen AI trade is spreading across the market. And by the way, therein is the opportunity as Gen AI takes hold in lots of companies, consumer applications, enterprise applications. That's the broadening out you're seeing. But the lower-end consumer is experiencing a bit of a pinch in the States. K-shaped economy.
Does the K get bigger? Is that...
Maybe. I think we're beginning to see the elements of what Gen AI might mean for the lower-end consumer. And what is interesting about a rate cut that you asked about, Guy, is a rate cut does help the construction, the housing market. Construction is a big hirer, a big job creation for the lower-end consumer. So that is where the rate cut could help.
Isn't the danger with Gen AI, and you're seeing it in the white-collar workers, that the danger's not down there. The danger's up here, isn't it?
You mean in terms of mid to
upper-end consumers?
You mean you and I? Yeah.
Yeah. Hopefully not.
Yeah, your avatar. I'll be talking to next week. But no, look, I think what's happening at the moment is people like you and I have Gen AI as an assistant. Jensen Huang talks about that. We're more productive as a result. If every company's more productive, then productivity will rise. So it's not replacing upper end.
I'm seeing job losses.
Yet. Job losses are largely in the lower end. As I said, Amazon, they're talking about robots for fulfillment. Sure. I don't think that's your job.
But other companies are talking about white-collar workers.
Yep. I think also graduates could be weaker than expected. Bringing in new graduates. There's a lot of applications coming for investment banking, doing the job of a young analyst investment banking. So this is something we have to watch, right? This is definitely coming in terms of Gen AI's impact on the labor
But
force.
Nancy, it feels like that premium, that AI premium that's showing up in some of these stocks isn't actually distributed equally. We were looking at, especially here in Europe, we'd had deals from NVIDIA talking about Deutsche Telekom with Nokia, among a series of others, and the premium is smaller here in Europe. That AI bid is smaller when it comes to partnerships here in Europe. You see the same thing in small caps in the U.S., even with these AI partnerships. If we are talking about a broadening out that's tied to the distribution of AI, how do you quantify that?
Well, I think it's a large cap. This is a winner-take-all environment. We've been very cautious on small and mid-cap. The companies are more exposed to tariffs and trade. They tend to be more intermediate. They have less pricing power. They have more leverage. You have more of the regional banks in that sector. So, our view is this is a large cap. The United States is definitely spending the most on Gen AI, probably likely to be the leader in Gen AI, winners and losers still to be determined. And I think, the market is now becoming more discerning. Look at the tech numbers last night. The difference between Alphabet and Meta. Alphabet showed a substantial increase in active users on its Gemini, and that contributed to the stock rising. Okay, it's spending a lot of money. It's getting some results.
But it's funding it out of cash flow. Like, it's funding it out of its existing business. Meta's not, and that's where the difference
Correct. And also Meta's advertising kind of softer, harder to imagine. And of course, if Meta overbuilds, what do you do with it? You know what I mean? Whereas Alphabet, Amazon can sell on that compute power. So I think that's also the differentiation.
At what margin? We will wait and find out. Nancy, great to see you. Always a pleasure. Genuinely. Nancy Curtin, Chief Investment Officer at Altitude Global. Let's take a look at the markets, figure out what is happening right now. NVIDIA is just beginning to soften up a little bit pre-market. Here in Europe, tech does, though, stand out. As you can see, ASML is the standout gainer. Elsewhere, you are seeing some weakness. Let's figure out what's happening in the banking sector. Some interesting moves there this morning, and Chloe Melly has been tracking them all.
Good morning, guys. So, yes, some positive movements for Société Générale today, which is up 1.5% after reporting better than expected profits. So that was due to, really strong cost control, but then also really strong performance in fixed income trading. So this is also a division that benefited Deutsche Bank quite a lot, and we saw that yesterday, and the stock also rose yesterday. So it's quite a good set of results with good performance across all of its divisions for SocGen this morning, and we see the stock rising on the back of that. We also have some positive movements for another bank, which is this time Dutch bank ING, which said that it was going to have a 1.1 billion euro buyback, and it also raised its revenue outlook for the year. So that is driving that stock quite a lot this morning. This is really ING delivering on its plan to boost growth through fee income and not rely as much on lending income, which is, of course, really dependent and really vulnerable to those interest rate changes. Moving on to a less positive story, and WPP is down quite a lot this morning. It slashed its revenue guidance and said that it was going to revamp its whole structure. So the new CEO, Cindy Rose, it's her first set of results, and she's really having to make some drastic changes to reverse what has been a really, really negative performance for WPP recently. It's really fallen behind its closest rival Publicis and also lost really big clients. So she has to make a lot of changes, and so far the revenue guidance being slashed is being quite negatively received by the market. Alien, on the other hand, it's a consumer healthcare company. It has reported quite reassuring results this morning, which is why the stock is up. It had to slash its revenue guidance last quarter at the earnings season over the summer, but it seems that it's doing better now, and despite some weakness in North America, it is able to deliver on that growth, and therefore it is being rewarded by the market this morning. And finally, Arcadis, which is a consulting company, reported quite weak results, and it was also downgraded at KBC, and that is really driving the stock down. We've got a massive drop this morning for that company, and it is down 18.7%.
All right, Chloe Melly from our equities team, we thank you so much walking us through some of those early movers in the European session. Coming up, we're going to dive into a little bit more of the details, specifically when it comes to European banking. That story next. This is Bloomberg.
Let's call it 19 minutes into the session. This is the picture. Index level, nothing to see here. This looks quite dull. Below the surface, there is lots going on this morning in terms of the single stock moves that you're seeing. There's plenty going on in the banking sector. We'll get to that in just a moment. Let's talk about one of the standouts to the upside, though. Airbus out with its numbers last night. Big focus on US shareholders at the moment, so kind of the focus there. The emphasis is what is happening in terms of kind of how they sort the supply chain out. There's a big focus at the moment of defence. Obviously, we've got the space unit that is kind of being created currently, built into sort of Toulouse at the moment. That's a big story going forward. But Guillaume Faury, the CEO, did continue to sound the alarm about what is happening in terms of the key kit that he needs to get the aircraft out of the door.
The main bottleneck is the engine availability from both CFM and Pratt. We were with a very difficult situation at mid-year. Things are improving. We think we're going to reach our numbers, as I said before, for 2025, but we will have persisting tensions on availability of engine in 26 and maybe in 27 as well.
Guillaume Faury, the CEO of Airbus, speaking to Bloomberg last night, he doesn't like building what he calls gliders, i.e. you can build the aeroplanes, but if you don't have engines to put on them, or aircraft to put onto the engines, then actually no good. Our global aviation editor, Benedict Campbell, is in London, which is fantastic as well. Good morning.
Hello.
He flew here.
Yeah.
I did, on a plane that has engines.
Excellent. It helps, doesn't it?
It does.
It makes life a lot easier, or at least faster. So how big a problem is this? There's a lot going on here. You've got the supply chain issue, which continues. You've got tariffs. You've got all kinds of issues going on. Is this the area to focus on, the supply chain still?
It is, and it has been for a while, and if you listen to Faury, it will continue to be. He said it's going to continue into next year and possibly 27. That's something that people don't like to hear. On the gliders issue that you mentioned, they are down to about 30 at this point. They had 60, so it's moving in the right direction. But the plan is really to get rid of all these gliders by the end of the year. They've built up a lot of inventory for the last couple of months to really get the kit out of the door. That costs them on the cash side. But the good news seems to be they have something of a handle on the problem. They are reducing these gliders, but the engines really will continue to be sort of a choke point.
Talk to us about Lufthansa earnings as well. What do we glean out of those numbers?
Very strong numbers, really, and the stock reacting quite positively. But if you look under the hood, there are some issues there. If you look at the North Atlantic market, that continues to be quite weak. That's something that we've heard from a number of European airlines. Virgin were the first to sound that alarm, BA to some degree, and now Lufthansa saying that the revenue per seat into the US market is actually quite weak. Also, interestingly, tariffs are actually hitting the company in their maintenance business. Steel is expensive, other materials, that's hurting them. They won't reach the targets they had in mind in that business. But overall, people seem quite happy that they are maintaining their outlook for this year and the stock is up.
I haven't seen you for a couple of days. Been focusing on the banks, which is interesting. But let's talk about what we've seen over the last few days in the aerospace sector. Boeing numbers. This charge relating to the 777X is enormous. They're still challenged by what is happening in terms of this strike, in terms of the defence business as well. We now know they're likely to push forward with a new single aisle. There's a lot going on at Boeing. How do you think investors should be reading kind of these various strands that Boeing is trying to pull together? What's the takeaway?
I think the takeaway is that Kelly Ortberg, the relatively new CEO, is trying to get all the bad news out of the way, and that's why you see this really large charge. We knew that there would be a charge. We didn't think it would be almost $5 billion on a program that they really should have a handle on at this point. And he was asked this by analysts on the call yesterday, and they said, why this charge, why so big? And he said, I don't want to see this cascading for months and quarters and quarters. I want to get the bad news out of the way, and I think we're done. The good news on that charge, or on that aircraft, is no problems with the plane, no problem with the airframe or the engines. It's all in the certification process. That's where the bottleneck lies. It's the FAA that are dragging their feet to some degree or being very careful.
Can you certify it during a shutdown? Is that part of the problem as well?
That's still going on, yes. So they still have the teams on the ground. That's still happening. Probably doesn't help and probably slows down things to some degree, but it's not the massive disruption that you'd expect.
And I believe that there's air traffic controllers in the States as well that are already talking about not getting paid, talking about striking. A lot of really fun stuff happening in the aviation space in the States. Bloomberg's editorial lead for global aviation, Benedict Campbell, joining us around the table. But you said it, a guy said it earlier, banks are really the focus this morning when it comes to what has been moving this market, not just today, but throughout the week. Standard Chartered, for example, has lifted its income and returns outlook as a reported third quarter profit that beat analyst estimates. On top of that, Credit Agricole, SocGen, also producing positive numbers. We spoke to the CFO of Credit Agricole earlier today. She said it was a strong overall performance.
Net income grew to 6 billion over the first 9 months of the year, which is in fact the target that we had set for the full year 2025 in our medium-term plan. Strong home loan production in France, strong corporate loan production in France and in Italy, strong inflows in insurance and in asset management, a very strong performance in our CIB with a record 9 months. And so this growth in revenues contributed, along with our operational efficiency.
The CFO of Crédit Agricole, they're speaking to us earlier in the program. We should mention she said those were strong numbers. The market disagrees. Those shares are down about 2%. Let's break it down further. Bloomberg's managing editor for EMEA Finance, Tom Metcalf, is here with more. Tom, let's put Crédit Agricole for the side for a second. Every other bank seems to be doing very well, not just today, but this week. What is your takeaway from the sector?
Yeah, it's been a pretty positive week set of earnings for most banks, and Standard Chartered's a good example. I mean, I think it's a different story for every bank. Standard Chartered today basically driven by very strong numbers in its wealth unit. So wealthy client, they say they're coming in, they're investing in the market. That's helping boost their bottom line. And yeah, the investors really responded well to that. I think shares are up 3-4%. Yeah. On that. A bit like HSBC, so similar story there in terms of you've got wealthy clients in Asia and they're keen to be in this market at the moment.
3.94% to the upside. Agricole's down. SocGen looks a little bit more positive. Talk to me about the French banks.
Yeah, SocGen, certainly it's just a good story there under the CEO, Krupa. I think the shares have doubled under him over the last year, and it's basically just good momentum. He's streamlining that bank. He's keeping costs under control, which is always critical. Yep. And investors just really welcoming that. Interesting on the Crédit Agricole side, yeah, slightly, I think it was just viewed as slightly soft, and, there was a big boost to the results from Banco BPM. Yeah. But I think that's seen as, as low quality. And also, it's not really kind of core for their French business.
Are we done for the banks this week now? Is that it?
I'm hoping so. I need to sleep.
So none tomorrow?
Not many. I think there's always a bank earnings. But no, the big ones for this week have come through, and it's been fascinating to see the ones.
Amazing. Our managing editor for EMEA Finance, Tom Metcalf, thank you very much indeed. Not just for today, all week. Great coverage. OK, let's talk about what we've got going on. Tech is a big theme this morning. And these are some, if you can read these are some of the numbers. There's kind of a standout story as well, which I think says Meta. Does that say Meta? I can't read it from here.
It does. Here, how about I do this one? Alphabet is higher by about 7%. Meta is down by about 7%. Those are the two earnings numbers that came out yesterday. Yeah. Pretty violent reactions in those stocks. Chipotle also not having a good day, down about 17%. They're worried about the end consumer. We're going to dive into all the details next. Stick with us. This is Bloomberg. Welcome back to the opening trade. About 30 minutes into today's session, it feels like a lackluster market on the index level. The FTSE 100, I should say, is down about 0.4%. That's the most exciting market move you're getting. The DAX higher by 0.3%. Don't ask me to make a narrative out of this, Guy. Over to you.
OK, miners are down a little bit. I think that's why London market is underperforming right now. To Kriti's point, though, what you've got this morning, certainly for European market perspective, is a series of single stocks that have been reporting numbers. There's some big names out there reporting numbers. And largely at an index level, we're kind of offsetting. So in terms of up 207, down 364. So the skew's a little negative. But volume up by, let's call it 20% this morning as we work our way through these earnings. It's only Thursday, you've still got Friday to go. In terms of the upside, ING, fee income, big boost to fee income. That's being rewarded by a 4% move to the upside. Airbus out with numbers last night. We just heard from Guillaume Faury. That stock is up by 3.3% this morning. Mercedes is also rallying a little bit. Have we hit the bottom now in terms of some of these auto stocks? OK, let's work our way through some of the laggards and see where the losers are coming through in Europe this morning. Schneider's down pretty hard, down by 2.12%. Diageo in the spirit space is down as well, hard. What is interesting this morning, there's a couple of things. Take a look at Kongsberg. We were just talking about this as we came to set. Down pretty hard this morning. So you're seeing some weakness coming through in some of the engineering companies. You're also seeing some of the weakness coming through into some of the energy companies as well, and the mining companies. Total is down by 1.2%, 1.3%. Basically what you're getting is a lot of offsetting this morning. Got some up, got some down. Pretty balanced. Index level, therefore fairly flat. Kriti, what else do we need to know?
Lots going on this morning. Drinking out of a fire hose. Let's get to some of the other news from around the world. Federal Reserve Chair Jay Powell delivered a blunt warning that investors need to rein in expectations for a December interest rate cut. Now, the comments underscored a growing tug of war among policymakers who are opposed in their outlooks for jobs and inflation. And sticking with central banks, let's talk about the Bank of Japan. The policy board left its benchmark interest rate unchanged. It's central bank's first decision since monetary easing advocate Sanae Takaishi became prime minister, illustrating the delicate balancing act that the BOJ is attempting as it tries to gauge the timing for its next move without being swayed by weakness in both the currency or its political leaders. And sticking with what's going on in Asia, Donald Trump and Xi Jinping agreed to extend a tariff truce, roll back export controls, and reduce other trade barriers in a landmark summit going on today, potentially stabilizing relations between the world's biggest economies after months of turmoil, Guy.
OK, let's talk about what is going on with... There's kind of a bunch of things we need to talk to Freya Beamish about. She's the chief economist at Global Data, TS Lombard. Global Data, TS Lombard?
Data TS Lombard,
OK,
that's the one.
just wanted to make sure that I had that right. That wasn't
Absolutely.
sort of two different bits. Anyway, look, nice to see you. We've got a whole bunch of things going on this morning. The first thing is Trump-Xi. So let's talk about that first. We need to talk about trade. We need to talk about what is happening with the Fed and the ECB and all the other good stuff as well. But let's start off with Trump and Xi. Trump said it was amazing. Was it?
I mean, I think the Chinese authorities have done amazingly well at playing their cards. I think they had a very clear threat that was a good threat on rare earths, and I think they had a very clear sort of exit route for Trump to take on the fentanyl side, and I think that's been quite clear for a few months now that they have been working very hard to show progress on the fentanyl side to give them that sort of escape route there, and I think that's paid off.
In terms of where it leaves us, though, and what the economic effect of kind of where we are now is, what is it?
Yeah, it's good in the sense that it pulls us back a little bit from the proximity of the overall tariff rates to what we would think of as sort of critical thresholds on where the dynamics of inflation really start to change, and you get more concerns over sticky inflation and higher and volatile inflation. So anything that pulls us away from that brink is good. I think potentially going into the new year, it's a midterms year, maybe they want to deliver some more wins, so you could even see sort of more positive surprises on this front of trying to bring down that tariff rate to some degree one way or another. And I think that all in isolation is good, but when you take it depends on where your delta is, right? So compared to the pre-Trump scenario before any of these policies really started to kick in, we are in a deteriorated supply side environment with, I would see the demand side as I think stronger than market consensus, and so that's a 2026 call for inflation to surprise to the upside.
So much of the pillars of Donald Trump's trade deals with countries around the world, it feels like has transformed from tariff rates to getting investment purchases and investments into the United States and really kind of building on the fiscal impulse that they already have. How much of that is actually, one, going to show up in the U.S. economy, and two, actually going to help grow?
Yeah, so I think there was always like multiple different roles that tariffs were going to play in the U.S. toolbox. Initially, it was about negotiation, then it was about fiscal policy, and now it's about sort of trying to provide those wins, as I said, going into a mid-year, a midterms year. So to the extent that in Europe and in Japan, in various different developed markets, in China as well, to some degree, policymakers are able to sort of make those offers and sweeten the deal. I think probably Trump is sort of willing to take those, given the political landscape.
Yeah.
The extent to which that will really come through and maybe was going to happen anyway is more of a question.
Do you have a percentage? I've heard this from various analysts when it comes to the actual tariff pass-through rate. I felt like the fear when it comes to the hit on the consumer that would, right now we're kind of seeing it shake around in corporate margins, basically, but that ultimately would get passed down. And that figure went from 75 to 80% to 60%. At least that's what I've heard from the consensus. Are those fair figures?
Yeah, I think that broadly speaking, it's sort of like 2/3 margin compression, 1/3 CPI. I see that flipping, reversing next year. You need a bit of a sort of a reversal. You need a little bit of a sort of reacceleration in the demand side of the economy. But I think margins are very high compared with 2019 levels. So corporations were able to sort of absorb that shock in the first instance while there's such high uncertainty. But if the economy sort of starts to stabilize, particularly if some of the fiscal impulse starts to come through, then it's possible for them to sort of pass that on, and that reverses and goes into CPI inflation.
OK, let's talk about the Fed. This is what Powell had to say last night.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it.
Foregone conclusion? Should it be a foregone conclusion?
No, and I think markets just got a little bit ahead of themselves with that pricing going into the meeting. We don't have all the data. Powell likened that to sort of driving through fog and therefore needing to slow down. He didn't have to take the metaphor in that direction, though. He could have talked about the sort of the second derivative. He could have said slow down in terms of the trajectory rather than slow down in terms of cuts. He chose to say slow down in terms of cuts. So that's a signal in itself. And I think sort of more broadly, he's signaling that there is certainly a lot of divergence on the committee. But I think in his mind, there's still sort of maybe we're starting to move back to. I shouldn't put words in his mouth, but we're starting to move back to the sort of the labour supply is maybe sort of stabilising. Yeah. Labour demand is maybe stabilising, and we're going more to thinking about actually is this pass-through rate going to continue? To what extent is this something more than a level shift in prices? Their base case is that it is just a level shift in prices. But he talked about maybe just waiting a cycle to think about if the labour supply if labour is actually stabilising.
What is the lag time right now for the Federal Reserve? Traditionally, when we talk about monetary policy, it's 18 months is the standard. Yeah. We've seen it show up in the economy faster, I want to say, post-COVID. What is the lag time between a rate cut meant to address tariff pressures, labor market, housing crisis, whatever? What kind of lag time are we looking at?
I think that the U.S. economy at this stage is actually able to sustain higher interest rates than perhaps people think, right? So the lag time is I don't see the policy as tight as the Fed themselves sees it, and I think we're going to see that in the economy being a bit stronger than people sort of expect. There's this kind of dichotomy between, oh, well, the spending data is a bit stronger and the labour market data is a bit weaker. But Powell was also sort of referencing how a lot of this is because of anecdotally corporations talking about what they can do with AI rather than hiring. And that means that this is a slightly different environment. We can't take the same level of signal from the labour market that we would normally do under these circumstances. Yeah. And I think that sort of that we're not as tight as people think maybe.
Donald Trump likes to talk about a housing crisis right around the corner. He's which I think is fascinating, given that we're seeing a steepening of the curve based on government shutdown. There's lots of fascinating things there. But he says housing is about to collapse. Like, we're minutes away from it collapsing. Are we?
I think we're definitely in a different secular environment on housing with immigration. I think that's one thing that Myron actually has right of the many list of things that Myron has said. I think immigration is in the research seen as a genuine sort of demand factor where there's constrained supply, and there's more likely to be constrained supply on the downside than there is even on the upside, because the houses exist, right? You're not going to go China on this and blow up the houses. So it's I think potentially we're in a different secular environment also, just kind of demographically there. I think we're not in an environment where there's a lot of debt out there in the household sector that really can sort of cause a housing problem to sort of multiply and cause a wider issue there.
OK, let's move on to what we're going to see for the rest of the day. I understand that the weather forecast for Florence today is thunder and lightning. Are we going to see that reflected maybe in what we get from Christine Lagarde and the ECB? Let's find out. We have sent Lizzie Burden to Florence. Remember, every once in a while the ECB goes on the road. Are we going to see thunder and lightning today, Lizzie?
Absolutely not. I don't think so. Morning all, morning Guy. It seems very much in the minds of markets and economists that all we're going to get today from the ECB is a hold, the third straight hold. And indeed, in our survey, economists see holds all the way for the next 2 years because the ECB is waiting for clarity when it comes to trade and French politics. They're hoping that they get a Goldilocks scenario that balances the trade weakness with the upside risk to inflation from the German fiscal stimulus. So really, the question that we're hoping gets answered at some stage is the direction of the next move. And the Governing Council really, really divided on this. If you listen to the French central bank governor, for example, he wants to keep a 9th cut on the table. But if you listen to the Austrian, Martin Kocher, he's talking about maybe the next move being a hike. And indeed, he told me just how divided he found the council when he joined it. I spoke to the Cypriot central bank governor talking about how the risks to inflation are balanced, but they need to keep their powder dry. So it may be that more than this meeting and the commentary around it, the best path, the best clue on the path ahead comes from the updated forecast when they come in December. And in fact, that could be what gives the cover to any future move.
Well, Lizzie, of course, we are waiting for that forecast. But in the meantime, a deluge of European data. I mean, the French economy seems to be doing a little bit better than we thought, according to data from this morning.
Yeah, giving a Gallic shrug to that political chaos that we have been seeing in recent weeks. The government, of course, collapsing in September, so an upside surprise of 0.5% growth for French GDP in the quarter. But the main event really has to be the Eurozone growth number that we're expecting at 10 a.m. London time. 0.1% growth only is what is expected. But the good news is that tomorrow we get the inflation number, and that's expected to come in nearly at the ECB's 2% target. So this is precisely why Lagarde is talking about the euro area economy being in a good place. She actually arrived early here in Florence. She was perusing one of the markets, shopping for panettone for her husband. She broke the quiet period and said that food inflation has further to fall. But really, when it comes to this press conference later, not expecting fireworks, thunderstorms, lightning, or any of the above.
You stay away from that as well, Lizzie Burden. Thank you very much indeed. Lizzie Burden in Florence. I'm sure she'll hit the markets as well a little bit later on. OK, back with Freya Beamish. Don't know why I got that one wrong.
Too many R's.
Yeah, I've said it plenty of times. There must be a kind of thing at the back of everybody's head that if things do go get a little softer for the ECB, there is the room to cut. Like, is it just one more potentially here? Is that where the balance of kind of risk lies at the moment?
Yeah, I think they're not trying to be too cute with finding neutral. You know, maybe earlier in the year there was a question of that, and the euro was giving them a bit of cover, and now we're a little bit back on the side of, there's just this US exceptionalism story, and there's the dollar was just a flash in the pan in April and May, and so maybe they feel they've got a bit less room there, and they don't want to try and be too cute about it. But while the kind of question of whether there's one more cut in the pipeline still lingers, it makes it a little bit hard to get onto our sort of I guess, off consensus call for next year, which is we think that they're moving towards a tightening bias for next year. So we see
late next year, early next year.
Late next year, we see a move towards a tightening bias there. You know, we see a benign reflation there, and the ECB sees it slightly different from us. You know, they'd be worried about German fiscal policy. We think it's great for the equity market, and it's good for the European economy in general. It's a little bit hard to play that until the question of whether the last cut is in.
Yeah.
But as soon as we kind of have some kind of sentiment there, it'll be a little bit easier to less costly to play that.
Wow, a tightening bias to the end of next year.
Yeah.
That's not one that I had on my bingo card. Freya Beamish, Chief Economist over at Global Data at TS Lombard, we thank you so much. Coming up, we go to some of the geopolitics. The progressive D66 party looks set to play a key role in forming a new government in the Netherlands. We are live in Amsterdam next. Stick with us. This is Bloomberg. Welcome back to the opening trade. About 48 minutes into today's session, take a look at the index level. The outperformer is the DAX, but that is due to some key earnings there. The FTSE 100, I think, is more interesting. That's where you're seeing the sell-off as the most acute, down about 0.5%. But risk sentiment certainly rolling over from what we saw earlier this week. Let's go to another story that we're monitoring very closely here in Europe. The centrist Democrat 66 party looks set to play a key role in forming a new Dutch government as its support nearly tripled in parliamentary elections. Losses, meanwhile, for the country's figurehead of the far right. Let's get a little bit more context here. Bloomberg's Oliver Crook is live on the ground in Amsterdam. Ollie, just set the stage for us here. This was a complete turnaround from what we were expecting.
Yeah, absolutely. And I think Dutch politics are fairly interesting and fairly distinct from what we see across the rest of Europe. For one thing, we talk about European fragmentation within politics. I mean, this is ground zero for that. You have 15 parties that are represented in the parliament. You had almost 30 parties that were running to vie for seats. And basically, you need 0.67% in order to get a single seat. And then you basically sit in the parliament, which is why you've had, for the last basically 5 years, about 40% of the time you've been stuck with caretaker governments. What they hope to end that is that sort of tradition within Dutch politics, where basically you've been stuck, haven't been able to make a lot of progress on long-term policy goals. And currently what we've got now is a tie between Geert Wilders, the far-right sort of firebrand, very anti-immigration, anti-Islam, and he lost a large proportion within the parliament. So now you have basically this tie between the far-right and the centrists. But remember, he pulled the plug on the last government. No one from that I've spoken to is going to be willing to basically enter into coalition with him. So the likely outcome here is going to have a centrist government that is going to lean potentially more to the left, though the center of gravity is still a little bit still to the right within Dutch politics. But what it will mean, obviously, sort of for the domestic politics, the main issues here are obviously on the economy, the cost of living. Immigration has been obviously top of the agenda, but also the housing crisis that we're seeing all across the rest of Europe. But when it comes to the broader European context, what we are going to get very likely over the next couple of months is a government that is much more pro-European, much more constructive when it comes to Europe. But even many of the parties on the right have changed their tune on this question of joint debt at the European level, particularly to pay for defense. We saw the Christian Democrats, for example, change their policy platform really over the last 6 months to say they're basically on board. And that is really significant, as you guys know, because the Netherlands, standing as one of the frugal four, has really been opposed to this idea. So really progress on the larger European context on this issue of joint debt and Eurobonds.
Ollie, the Netherlands has felt recently like it's trapped between China and the United States. Does this election change that? Does it change the tone of how the Netherlands thinks about the relationships it has with both Beijing and Washington?
Well, what it will give is hopefully a strong government that can govern for the next 4 years and as a consequence come up with a sort of coherent game plan with how to sort of position itself. Because I think you're absolutely right, Guy, and everybody we speak to really has this as one of the prime risks here for the Netherlands. You have this sort of stuck between China and the United States, drawn really to home by this issue with Nexperia that we saw over the last couple of months, where the Dutch government effectively took control of this chip company from a Chinese owner in order to basically prevent it from, they were concerned, of being gutted. You had the same issue with ASML. There is also, however, Guy, an opportunity in this. Are there really any other companies within Europe that are so sort of monopolizing of a single absolutely crucial part of the manufacturing and the semiconductor infrastructure across the world? There is not. So if a government that can speak coherently, that can get more on Team Europe at the European level, may have more sway in some of these geopolitical issues where the United States actually needs them, particularly on this question of ASML. So there is an opportunity here. There is, of course, also a risk.
Oliver Crook in Amsterdam, connecting the dots for us on the political space in the Netherlands with, of course, the corporations that we keep an eye out of Amsterdam. We thank you so much. Let's stick with the tech theme because it is very much on the agenda for today. We do have Apple and Amazon reporting after the bell, alongside some data that's going to be hitting the wire, plus, of course, the ECB rate decision right off the heels of the BOJ and the Federal Reserve. But let's circle back to that tech story because you're seeing some massive moves already in the pre-market when it comes to the ones that reported yesterday.
Absolutely. Meta's one that really stands out to the downside. Big moves in Meta. The argument seems to be something like this from shareholders. You've got our money. Are we really sure that we want you spending our money in the way that you are currently? The CapEx bill over at Meta is absolutely enormous. Now, Microsoft is also kind of, you could argue to a certain extent, in that camp as well. What was interesting is that Alphabet stood out as being a much more positive picture. Ad business is doing well. It can kind of fund the spending out of that. In terms of what we're seeing pre-market, as you can see, there's some fairly big moves. Like Meta in particular is moving to the downside. Matt Bloxham joins us now to discuss all this. Is that the right message? Basically, shareholders going like, you got our money. We're not entirely convinced that we want you spending it in the way that you are at the moment.
Yeah, I think that's right. I mean, obviously, but all three companies beat on revenue, but I think certainly for Meta and Microsoft, the beat wasn't enough to align with the spending plans, and certainly for Meta. And I think my assessment would be that Mark Zuckerberg's commentary about future spending a bit too cavalier for what the market wants to hear, that, you know, it doesn't so matter so much if we spend more than we need to, we can maybe resell some of that capacity to other players. I think investors are looking for a much sharper assessment of what the return on investment is. And I think when you look at the operating performance, their large language models are lagging Gemini and OpenAI by quite some distance in the corporate environment. So I think the market's looking for more evidence that they're closing that gap.
Talk to us about Alphabet here, because they are coming out on top in a very big way, but they haven't even uttered the words artificial intelligence, really, to the extent that their peers have. They're still talking about cloud.
Yeah, they are. And obviously, cloud, you know, does cover AI too for them, and strong performance there. Their cloud business was up 34%. They've registered, a number of billion-dollar-plus deals. I think the market's confident that they've got momentum there. Obviously, they're the number 3 player after Amazon and Microsoft in that market. I think the other thing with Google is that their core advertising, their search business, which people worry is at risk from ChatGPT, is holding up well. Gemini is 650 million active users now. So I think overall their platform's proving to be more resilient than people were concerned about.
Amazon, Apple, later. We're going to watch those. Just 2 seconds. What do we like?
Apple, it's all about the momentum behind iPhone 17. Market's looking for strong performance across the world, but particularly China. Amazon, it's again the similar story of cloud growth and what their forward spending plans are. And obviously, Amazon is also cutting headcount, so there's a range of issues there for them to deal with.
Busy day ahead. Matt, great stuff. Thank you very much indeed. Matt Bloxham, Senior Tech Analyst for Bloomberg Intelligence. NVIDIA is also fairly flat. Big jump yesterday. Holding on to it, which is interesting, given the fact that actually it wasn't mentioned really as part of the Trump-Xi conversation. So I'm surprised it's kind of holding on to those gains, but it is at the moment.
Yeah, well, we're still getting trickles of what's coming out of that meeting and that readout. So I wonder if that's something that maybe gets a little bit more attention either to the upside or the downside as we get closer to the opening bell in the States. It's been a fascinating show to put together. I mean, from the trade to the central banks to the earnings on both sides of the Atlantic.
Okay, we're done. We're going to hand things over to the States. The opening trade is done, but the brief is next. Bright day in London. This is Bloomberg.